ATRenew, ticker symbol RERE, just beat Q2 2026 consensus across the board.
Right.
I mean, revenue hit $972.82 million, EPS came in at 10 cents, and they guided Q3 revenue between 6.34 and 6.44 billion RMB.
Right, which converts to roughly like 870 to 885 million US dollars. But, despite that double beat, the stock completely gapped down post-earnings. It plummeted about 11% to hover right around $4.07.
Okay, so let's unpack this. We're doing a deep dive into our financial notes today because, well, why does the stock tank after posting record revenue and profit?
Yeah, it basically comes down to a classic sell the news dynamic. The market punished the stock because that Q3 guidance was actually softer than Wall Street's elevated expectations.
Right, because analysts were essentially pricing in perfection.
Exactly. When expectations are that high, just posting solid year-over-year growth isn't going to cut it for investors.
So looking under the hood at the segment performance, it's almost like a sports team relying heavily on just one star player to win.
Yeah, that's a great way to put it.
Because their 1P, or first-party product revenue, totally carried the quarter. It surged 35.9%. But then their 3P, the third-party service revenue, actually dropped 4.2%.
Right, and management claims that 3P drop was a highly strategic move. During the 618 shopping festival, ATRenew decided to, offer merchant subsidies.
Oh, wow. So they intentionally took a hit on their platform fees.
Yeah, exactly. They sacrificed that high-margin service revenue on purpose just to drive raw volume and capture market share.
Wait, but if I'm a retail investor, how do I know that was actually a smart move and not just, desperate discounting to keep sellers around?
Well, you just have to look at the bottom line. If it was just desperation, margins would have compressed. But overall, non-GAAP operating profit jumped 70.1% to 210 million RMB.
Oh, okay. And operating margins actually expanded to 3.1%.
Right. So by waiving those 3P fees, they basically funneled users into their own ecosystem to sell more of their first-party inventory. It was a trade-off that actually paid off.
That makes total sense. And there was this really counterintuitive insight from CEO Carrie Chen on the call. Rising memory costs are pushing up the prices of brand new devices.
Yeah, which you'd normally think would hurt consumer electronics across the board.
Exactly. But for ATRenew, it's the exact opposite. Because as new phones get more expensive, trade-in programs transition from being like a nice-to-have supplementary service into a critical promotional tool. It actually drives ATRenew's demand.
Because when consumers get sticker shock at a $1,200 phone, trade-ins are basically the primary lever brands have to incentivize an upgrade.
Right. But, there are some notable near-term risks that retail investors really need to watch here.
Definitely. Especially regarding that heavy reliance on the 1P model. Because 1P is incredibly capital intensive. You have to, buy and hold physical inventory.
Yeah, and take on the risk if device values drop. It's miles away from just collecting a platform fee.
Exactly. So there's a legitimate question about whether funding their growth through that heavy capital-intensive side is actually sustainable long-term.
Plus, there's the whole uncertainty around the staggered iPhone 18 launch.
Right, which is a massive supply bottleneck. Because if Apple staggers the release of the Pro models versus the base models, consumers might delay their upgrades.
Which then starves ATRenew of the incoming supply they need to actually refurbish and sell.
Exactly. But there's one final thread I want to pull on before we go.
Oh, yeah? What's that?
Well, as higher tech prices squeeze consumers globally, ATRenew is quietly expanding overseas. They just launched a B2B platform called Phone Square and opened up retail stores in Hong Kong.
Oh, wow. So they're looking outside the domestic market.
Right. So the question to mull over is, could that untapped international expansion be the real growth engine the market is currently mispricing?
Definitely an interesting thought to leave you with before the next opening bell. Make sure to follow the show for your daily earnings coverage.